那放快手？
换快手，要不然他那个卡的话，他也看不了。
为什么同样的往快手就可以？
对。我下次可以再琢磨琢磨那个小红书里，因为刚才一看已经有20个人进来了。
对，那个确实是很看。这个快手就可以。还把链接发给你。
对，还是把那个链接发给我。
我怀疑是这个快手就是专业做直播的，然后它的那个各种网络比那个顺畅。还是小红书现在有人看。这个快手这个信号也是 stack， 一会儿 stack 一会儿好了，现在一会儿好了。
是吧？
来了。
有。有一打开。电脑还没有充
了电吗？
没电手机。 可能刚才没有说上。
那压冲里边有。
哦，有这个，
有。
对。camera。现在有，好的，快手那边应该也是可以。我看那个快手那边应该是可以的吧？
可以，可以。那个刘海蓝在上面吗？对对，带上。
All right, get started. Okay. At least today we have a few online, 1 or 2 online, so that's good. That's good sign. We have some tractions. So we're gonna, for some of those who attend the live stream first time, you may not catch up, but eventually I'll, go back to cover some fundamental concepts. But we'll keep plugging away with where we left over from last week. So start with the security market. Okay. This course is all about personal finance. It's our goal is to teach you how to manage your wealth, understanding what's the security, the stock market, the fixed income market, and eventually you're gonna have a good science of investments and wealth management, and to assist your clients to better manage their portfolios, right? So start with the security market. What does the security market mean to us? At first, security market is allow buyers and sellers to sell securities. It's regarding financial transactions, and this broader concept. It can be there's different type of security market, right? And there's broker market, dealers market. For example, when we think about Wall Street, in the old, let's say good old days, the people in the Wall Street on the floor, they shouting at buying, sell stocks. So that's kind of like the dealers, called the dealers, the big wheel, the big guys on the street. Electronic and high frequency trading. So those are computer related. So trading based on the algorithm, we call high frequency. So they can trade within the milliseconds. So it's very fast. So based on it is the computer program does the heavy lifting. So it's not a human do the trading. It's only rely on the computer program. And general market condition, what is bull and bear market? There's one thing that's very interesting is when stock goes up in North America, we saw as green, right? And when the stock goes down, we saw the red color, we color red. But it's opposite if you are in China, right? When stock goes up, it's red, and then goes down, it's green. So don't get confused. It's just color, different preference. In here, not maybe here they prefer the green instead of red, right? In China, the red is a good thing, right? So it's a good sign of the color. So that's why they're picking the red. So it doesn't matter if the colors, as long as the bull market goes up, bear market goes down. Okay. All right. So the general concept. For those of students tune in the YouTube channel, you may not able to see the PowerPoint slide, but I'll try to moving away so you may able to see some slide, but it's unfortunate I cannot make it both works. But next time, send me, for those who on YouTube, you can send me a message and I'll send you the slide. So I can send you PowerPoint slide, and you can read the slide on your own PC or cell phone, and that make it easier. Otherwise, otherwise, it's hard to read the PPT slide. All right. Okay. So let's keep going with the different type of security market. Right. When we referring security, there's a money market. Money market. When we say money is we instantly can see it. Right. They call money market. So that means referring in the financial, referring to the short term. Okay. So I can turn this paper into money right away. Okay? So they call money market. So that in general, money market is short-term debt security and very liquid. The liquid means I can sell this paper and turn it into a cash right away. Okay, they call money market. Typically, money market is when we're referring short term, it can be a few days, can be a few weeks, and can be a month or 3 months. Right? Capital market, basically we're referring to the stock market or bond market, fixed income. Those are considered long-term securities, but for the equities or stock, people also trading in the short term as well, so day trading, right? But the capital market in general, we're referring to as a long-term market. And then there's a primary and secondary market. Okay, so for the retail investor like us, the small investors, we able to trade stock on the secondary market. Okay, on the secondary. So it's not in the primary. What is primary and secondary market difference is? Okay, for example, the primary market is people able those private equities or those fund managers or those Wall Street people. They can tap into the private companies and help them to go into IPO. Okay, so the cut off is IPO. Okay, so before the IPO, it's called primary market, right? And after the IPO, when everybody can buy those shares, and it's called secondary market, right? So the difference, as long as you know where's the cutoff line, would be fine, right? So after IPO is secondary market. Before IPO is primary market. Okay. In Canada, we have Ontario Security Commissions. So different across the globe, every country they have a security commission to regulate the security market, either by both equity or fixed income or derivative market. Okay, so typically the security market is heavily regulated and is help for it protect the small investors. Okay, to protect small investors. In Canada, it's a bit different. In China, there is a security commission for all provinces in China. Right? In US, there's a security commission for all the states in US. But in Canada, each province has their own security commissions. So this, for example, let's say Ontario Security Commissions, and there's Manitoba Security Commissions. There's Alberta. So each province have their own regulatory framework to to regulate this stock market. Okay. And Security and Exchange Commission. So that's a federal agency. That means the Security and Exchange Commission regulate the security market in US. So that's exactly like in US, there's one, but in Canada, each province have their own commission. Okay, so there's a little bit quite difference. And it's kind of make a cubism for trading, for Canada, because there's so many different regulatory bodies to regulate the financial market. Okay. And the reason why they got, the retail investor need to be protected. And if you reading the news recently, they call SBF, the FTX crypto exchange, so cryptocurrency exchange, they went under. I mean, they went bankrupt. People like us, they trade in cryptocurrencies. They put money in their like exchange account. Nobody can withdraw money from their FTX exchange. So that means until right now, all the retailers or they're not lose pretty much going to lose a lot of money. Okay, that the reason is the cryptocurrency is still not being regulated, right? And the retail investors are now protected. So there's a huge risk involved if there's no proper regulatory framework to regulate all the tradings and regulate all the participants in the financial market. There'll be something going to happen like the FTX, right? At the one time, I think the token was trading like $20-$30 per token, and now it's like I think it's 0.1 cents per token, right? So pretty much the investors get into the FTS, called FTT tokens, lost everything. Right? All right, so carry on with the primary market. So marketing with issue security are sold to the investors, and that's called IPO. So before IPO, after IPO, the first public sales of company of stock. So we talk a lot. We heard lots of IPOs. Example, Alibaba was at that time was largest IPO ever, and there's so many IPOs, and there's good ones and bad ones. Okay, Alibaba was kind of okay one and not so good, but eventually they turn out pretty well. The bad examples is most just this year called Didi, Didi Dace. Okay, they did IPO in US, and guess what happens after IPO? I think they were trading like $20 something, and now they are trading after IPO in a very short time. I think like in a few months, the price from IPO all the way down to few dollars, and then they delisted. So they listed on the stock market in US, and they delisted. So they removed the DD stock from stock exchange. They remove it, right? And that's what happened. Lots of investors lost lots of money, right? From if they bought the DD stock. Okay, so this is a chart for people who couldn't see it. I'm going to just explain it simply, explain it what this chart says. So this is a TSX. TSX representing Toronto Stock Exchange. Okay, it's only in Canada. And in the first column is physical, so that the years. Second, number of IPOs, average first day return, and average gross proceed. Okay, so and this is it's very interesting data, because when we contract with the IPO between the North America and China, it'll be very interesting to see the two very different set of play out, how IPO going to play it out. Okay, this is in Canada, so the first day return kind of mostly it goes up. Okay, in average mostly it goes up, and it's 5 to 10%, 5 to 10% first day. All right, and everybody, as long as you want to participate in IPO, you can get into it to to buy the shares. All right, so those are typical in North America. So as long as as a retail investor, you want to participate in IPO, you can talk to a broker and say, I want to buy those number of shares, 500,000 shares, and you will be able to get into the IPO. Okay, to buy the initial shares. All right, but in contract in China, if you're lucky, you can buy the IPO shares. It's like a running lottery draw. You have to send out a request, and if the retail investor are lucky, they get picked, then you can buy shares. Okay, that's quite a significant, phenomenon in China, and it's very unique phenomenon in China. None other countries have that happened, only in China. So people, the small investors or all investors in China were thinking, as long as I can get into IPO, I'll make profit. So it seems like it guaranteed on the first day of the IPO, the stock price is going to go up. Okay, so looks like it's guaranteed. That's why so many people want to get into IPO, right? But in Canada, for example, there's also instance the first day of trading, the share price, the return, it means the share price didn't go up, actually it goes down, right? There are situations like that, but not a lot, but still. A good example from US would be Facebook. Okay, first day of IPO for Facebook, they actually down like 10% or something, right? So it's kind of interesting. I think there's also scholars study about the IPOs in China, why there's such significant deviation from China and compared to other countries. Right? But mostly, if you look at the data, the first day return mostly is positive, right? And it shows the signs if you can buy the shares on the first day or get into the IPO, and I can make good profit in areas making good profit around 5 to 10% on the first day. A type of primary market, we talked about that. The choice to make a security in primary market, public offering, and red offering, share, and also private placements. Okay, private placements. Basically, it means like several big, big guys. They have lots of money, right? They can take it, buy the company themselves instead of put this onto the market. Okay, it's kind of like a reverse of a public offering, right? Public offering is put this stock onto the secondary market, so all the retail investors are able to get access and to buy or sell the security. Private placements means opposite, so they will not going to be on the secondary market. Okay, it will be a group of few investors. They put their money, they buy all the shares of this company, right? Red offering is shares are offered to existing shareholders on pro databases. So that's it's something like the company when they issue more shares, they can compensate the existing shareholders. Like give the shareholders, current existing shareholders, the right to buy more shares. Okay, so the existing shareholder have that privilege to buy more shares, compared to the retailers. All right. Underwriting. Okay, so that's gonna get into IPO. How does IPO gonna work, and how does company go on IPO? Right? We talk a lot about IPO. We get into the details. How does company get started IPO process? Okay, let's say you are CEO of a company, private company. You want to take your company onto the market, and what should you do? How can you take the company into the market? Firstly, you need to find someone to underwriting the company, underwriting a company. So what does underwriting means is promoting a stock, facilitating the sales of company's share served by the investment dealers in Canada or in the US. It sounds a little bit complicated, but let's make it simple. Let's say Goldman Sachs or JP Morgan, those investment bankers, okay? They are the underwriters. Okay? As CEO of the company, private company, you're gonna reach out to the investment bankers. They'll say, we're gonna do the valuation. We're gonna put those numbers. You're gonna supply us your financial statements, your financial information. We're gonna put this into our model and running some very complicated analysis, and we'll determine how much money your company is gonna worth. Okay, and we're gonna decide on how many shares we're gonna issue. Okay, and we're gonna decide what portion of the company, the value we're gonna put on the market. Okay, eventually we're gonna decide dollar amount per share price. So all those works was done by the investment dealers, with referring to the Goldman Sachs, JP Morgan, and so forth. Okay, so they do the underwriting works. Okay, prospectus is just thinking this is a document. It's just a document. The documents or shows prepared. This document is prepared by the underwriters, which means the investment dealers. Okay, they're gonna put everything into the documents and get submitted to the regulatory body, right? The commissions, security commissions, and they get approved. Once they get approved, they can issue they can take the company into IPO, right? So what does this prospectus include in these documents? This is typically very long documents, for at least like 30 pages plus. Some will be a few hundred pages, and mainly they will include financial statements. Okay, financial statements will include the income statements, balance sheets, and cash flow statements. Okay, and they also disclose the risk involved. They also going to disclose their management, all the information was required by and then each regulatory is different, right? So they have to base on their regulatory body's requirements. So in Canada, it will be a little bit different from US. I do think in China also be a little bit different as well. So it will be based on the regulatory bodies or security commissions requirements. Okay. So simply just a document. So the underwriter does all the works at the end. Think this as output. The output is the documents. And the document be submitted to the security commission. Okay? And then once they get approved, it can go IPO, right? And next, the waiting period. So time period after prospectus is filed, the company must restrict what is said about company. And so this is this considered as some insider information, right? Let's say if the company at this time they call quiet period, so they cannot release any information. Otherwise, let's say if anything was leaking to the market, people will know, oh, this is going to be a good deal, this is a bad deal, right? And those informations asymmetry will causing the big risk for imbalance and also unnecessary risk for all the retail investors. And some definitely there's a small group people can benefit from it, right? But based on the security commission regulation or based on the law, it's not legal. Okay, if you trade insider information in Canada or in US, you can get, it's first of all it's not legal, so you can get a big fine, so you can pay penalties for it. Worse, you can put into the jail. So right hearing is preliminary prospectus available during the waiting period. ROSO, series of printing. So ROSO is like the CEO, CFO, and the investment bankers. They go to different, let's say different cities, or they will meet the investors, right? And they'll talk about what their company, their business, and try to show their potential, company's potential. So the more investors will be interested in their company and interested in their business and also business model, and give a sense of, they can making big profit in the next few years, and people will be, more interested in buying their stock, right? Okay, so this is a cover of the preliminary prospectus documents for Shopify. Shopify is at one time is biggest tech companies in Canada. So Shopify is very similar to I'll say or very similar to Alibaba, but what does they do is they are a tech company. They providing their users a platform, and the users can sell the products on their platform. So it's very similar. I would say more, not because Alibaba is doing the import export stuff, right? This is more like a domestic business. So I was like Tmall, or not JD, not Tim, no. Cannot think anything. But simply it is a platform. Okay, the platform. What is more? I think Alibaba is better comparison. But all right, so this is what it looks like. More. This is first page. It's not much. You can see, but millions here per offer shares, number of shares going to offer per shares, and the total offering. Okay. And IPO online pricing, market pricing. This is some equations. I think this is not. I mean, it's good to know, right? It's good to know, but it's not necessary to helping. If we try to making profit from any IPOs. But those terms is IPO on the pricing is market price minus offer price, and bracket divided by offer price. Gross proceed is IPO offer price times number of IPO shares sold. Okay, so this is gross proceed. This is from the company's perspective. How much money the company will get after the IPO. Okay. And one thing is, until before the IPO, the last minute, they will not decide how much, what's the dollar amount per share, the share price. Okay, they will have a generous idea, the range, the share price going to be, but they will not decide until the last minute. Let's say the IPO days. Let's say IPO today on the 18th December. Okay, 8:30 when the market open. Okay, so what they do is all the investment bankers and all CEOs, CFOs, they will not decide the final price of their shares until, let's say, 8 o'clock in the morning, 18th. Okay, so why is that? Why they not going to? Why they don't decide that? The reason is very simple. They want to see, from a company's perspective or from the dealers, Goldman Sachs, JP Morgan, investment bankers, from their perspective, they want sell the share, the IPO price higher is better, right? The company, the growth proceed, so the company can get more money from the IPO, right? So growth proceed. If the offer, the number of shares not going to be same, it will be predetermined. Okay, number of shares going to be predetermined, going to be same. But if the offer price is higher, the growth proceed will be more, be greater, right? Simple equation. And the investment bankers, Goldman Sachs, JP Morgan, or they will making more money because their profit will be based on the percentage of the growth proceed. Okay, it's not fixed revenue for the investment dealers, okay, the investment bankers. Okay, so that's main reason they want to hold it up until they have a sense of how many people already placed their order. If there's people lining up to buy this stock, then you would check out the price. It'll be higher. If there's less people to buy, they will lower the price, right? Because they want, first of all, they have to go IPO, right? So kind of play the trick of as a businessman, you want to get more than less, right? So as simple as that. And we talk about investment dealers, basic Goldman Sachs, JP Morgan, those type of financial institutions. IPO, we also talk about underwriting, right? I think those are pretty, we already covered those. Type of security, okay, underwrite syndicate. So syndicates is a group of people, right? They form syndicate is okay. They're very interesting thing is in North America, when for the underwriting business, you barely see one company take over the entire deal. Okay, you always see there's few investment dealers. They work together to help one company to go IPO. Always like that. Okay, and based on the Goldman Sachs and JP Morgan, they're a very big company, right? Big investment banking company, right? They can do it themselves. Okay? They definitely can do it themselves. But even for smaller IPOs, they will prefer to have a syndicate or group working with other investment companies and to do the underwriting work. The reason is they want, they want less risk because it can be risky for the investment dealers as well. Right? Because some deal, why is risky? Some deals, the investment dealers, let's say the syndicates, they'll buy the company all the shares. They'll tell, let's say, your company going to be IPO, right? The syndicates, underwriting syndicate, is going to tell the company, say, this is how much company going to worth. We're going to buy it, right? All the shares. Okay, we're going to pay $10 per share for all the shares. We're going to buy it first. Then we're going to sell on the IPO. We're going to sell on the secondary market. Okay, if the price goes up, right, from $10 to $15, the underwriting syndicate is going to make $5 profit. What if the price goes down from $10 to $5? The syndicate will lose $5, right? So there's very big risk involved. So that's why they don't do it alone. They always working with other company financial institutions. For example, JP Morgan will be working with Goldman Sachs or with Citigroup, Bank of America, right? Those big companies. Okay, selling group, brokers, they deal. We always right now we're kind of talking the high level. But here we're gonna drill into a little bit details. Okay, so issuing firm, so your company going to go on IPO, online syndicate, there'll be lead investment dealers, okay, leading it, and there'll be other investment dealers involves different company. It's different company, right? Different company. And selling group will be sell to the investor. For retailers, will be buy from the brokers. Brokers. The brokers, for example, the bank can be a broker, RBC, BMO, it can be broker. Right? TD Security it can be broker. Right? So those selling is broker, and the retail investors buy from the brokers. All right, direct listing process. Direct listing, there's one example I can think of is Google. Google skipped the investment dealers. Basically, what direct listing is issue firm. They skip this part. Okay, they don't hire the investment dealers. They don't they don't like JP Morgan or Goldman Sachs. They directly sell shares to the brokerage firms. Okay. So that's direct listing. And the one I think I can recall is Google. Google did that, but it's very rare situation direct listing. Okay. Benefit definitely is saving a lot of money because you're paying investor dealers millions dollars for do the underwriting, right? To take a company to IPO. All right. So that's primary market. Then secondary market is we have, previously we talked about the cutoff line is IPO, right? So once the IPO, it goes on the secondary market. And secondary market is typically what we all, everybody would say as a stock market. So that's in the term as a secondary market. That's all the small investors, they can buy and sell shares. The small investor can buy and sell shares. Right? And how they're gonna buy and sell shares? Right? They're from typically have a national security exchange in Canada. They're called Toronto Stock Exchange. Most people were familiar with stock exchange in US. For example, Dow Jones, Nasdaq, and S&P 500. Okay. And there's beside those security exchange, there's also over-the-counter market. Right? Over-the-counter market. Over-the-counter with means it's not those securities not traded on the exchange, and we call it over-the-counter market. Broker and dealers market in the old days, those very important, very important. This I don't want to get into very technical details how the stock market in depth because it can get really nitty-gritty things about how that works. But basically, think about the stock market. There's stock market is about buying and sell. It's all about buying and sell, right? We talk about spread. Spread is ask price minus bid price. Okay, so you buy and you sell is two different price. As small investors always buy at high and sell at low. Okay, and why is that? Because the brokers, the dealers, they charging the spread. Okay, and why they can do it? Why do we need those people making money off the US retail investors? Because the market need them to pump the liquidities. Okay, they need to pump the liquidity. The pump liquidity means when the retail investors who buy a share at first, the broker has to have the share in their inventory, right? When the broker hold inventory, the share price fluctuate, the broker is taking a risk, right? Like when you own say you own a store, you sell, let's say you sell candies, right? And you have to stock lots of box of candies that you sell. Let's say the candy's price goes down and your inventory's value goes down with it. Your candy price goes up and you get more money from by selling those candies. Same thing here. When the broker hold the stock, the inventories, right? The price goes up, no, it's good. But what if the price goes down? Right? They are consume very large risk. So that's why you charge the spread. The brokers always buy low, sell high. Always buy low, sell high. That's the spread. Okay, that's the spread. Right? And retailers is always buy high, sell low. Right? And how much is the spread? We know the concept, but how much is it? For very liquid, let's say Apple, Tesla, or Alibaba, or the big company Amazon, their spread is just 1 cent or 2 cents per share, or a few cents per share. Right? But for unliquid, not so liquid companies, the spread can be $1, can be $2. So I said that DD was unlisted, right? Removed from the stock exchange. So once they remove this from the stock exchange, now they're trading the over-the-counter market. DD is not trading, DD.ce is trading on the over-the-counter market, right? Guess what's the spread on the over-the-counter market? It can be $1. So let's say DD's price $6 now, right? If you want to buy the share DD shares, you're gonna pay $7. And as soon as you bought DD share at $7, you say, "Oh, I made a mistake. I want to sell those shares." You only can sell $6. Okay, you only can sell $6. So that's the difference called the spread. And it's very important. The spread is so important. Otherwise, if you don't have a sense of spread, you can be losing quite a bit of money. Right? You can just buy a bunch of shares and then sell right away. Because immediately you're gonna lose money. If you do that, immediately you're gonna lose money, right? Unless after buying the skyrocket, the share price skyrocket, but that's another story. But typically, we don't do that. Okay, so brokers. We talk about brokers and dealers. Let's see how much time I have. Oh, I have another 10 minutes. Okay, we're gonna have another 10 minutes. Let me check. All right, so we have 2 users from YouTube, and that's good. All right, and for those tuning in on YouTube or Quest, or you can leave a message or say hi, and I can see you can see the chat box, right? Do I have this? Okay, I do. All right. Okay. Okay, so now we talk about okay. So there's more Nasdaq, right? NEO is a smaller exchange. Let's say in China there are Shanghai exchange, there are Shenzhen exchange. Shenzhen is smaller for the smaller companies. Right? Same thing here in Canada. There's Toronto exchange and NEO exchange. Okay, so broker-dealer, future exchange. Okay, so options and futures. So we talk about options, right? And there's option exchange as well. Options can be on stock options and can be on the commodity options. And option, there can be options on the future contract. Future exchange is means for a future contract. Okay, so what I'm gonna do, I think we're gonna the the future contract it's a contract give the buyer sellers state the conditions in a fixed price in the future. So once we have the contract, the buyer and the seller of the contract has to honor whatever the term state on the contract. Simple as that. And there's option on the future contract. Okay, options on the future contract. So it can be very technical about that, but as long as you know it, options and futures, they can be trading on different in here exchange. Okay, stock is trading in the stock exchange, right? There's different stock exchange, Nasdaq, Dow Jones, TSX, S&P 500, right? For the futures, they are the CME group, and they're trading futures. For options, they call CBOE, Dominant Exchange, the Chicago Board Option Exchange. Okay. So different securities, they have a different exchange platform, and for the equities alone, they have a different exchange as well. Okay. All right, and okay, so we talk about bid ask price. Right? Bid price, the highest price offered to purchase a given security. Ask price is the lowest price offered to sell a given security. Okay? And OTC market is just thinking OTC market is if the security not listing regulated stock exchange or then they can be trading on the OTC market. And it's many smaller companies, and the spread is very high for OTC market, and it's less regulated. Okay, it's less regulated. Okay. So it's here, the last bullet points: company trading on the OTC market group are not required to file with SEC. So it means they don't need to provide their financial informations to the commissions, security commissions, right? So basically, the company, the investor will not have enough information to analyze or to study the company, okay? Because they don't require the company to disclose those informations. Right? Broker dealers, OTC Pink is unregulated, small risky companies. I think we can skip those. Those are we don't need to know. Those too much details. I think that's too much details. Okay. Okay, so this is very interesting. I'm going to wrapping up with the last section is electronic high frequency trading, because nowadays it's all about the computer, right? Who owns the highest computer, and then there'll be have the edge to win the game, computer game, or they can have the edge of develop a new drug, right? They have the edge of to making more money in the stock market or in bond market. So electronic communication network called ECN. So is automated computer-based trading system that electronic execute orders by matching or crossing the buy and sell orders for securities. Okay, so basically this network, basically is a platform, is all computerized. Okay? Buy and sell is all computerized. And most effective for high volume, active trade security and play a key role in after-hour trading. Classified as alternative trading system compared to dealers market. Okay, dealers market, there's dealers, they have to see, they have to constant monitor, right? And this is all computerized. Okay, this is all computerized. And so first of all, this is electronic, and then we go, I think I have a slide for high frequency, right? High frequency trading means ultra fast algorithmic trading that rely on computer and electronic order executions. Traders use highly sophisticated computer-based trading strategies to analyze the market and execute orders based on the market condition during moving in and out position in the second or fraction of a second. Okay? They're pretty much like the right now, pretty much all the tradings was done by the high frequency tradings fund managers, because before people was in the old days, let's say in China or in North America, there are traders. Traders are just trading buy and sell security stocks. Okay, they will look at the chart, right? They look at the chart and buy and sell stocks. So there's you see the news like people become millionaire for trading stocks. Those are top traders. But as soon as we have those computer can does the same work and is making more money and more efficient, and the traders, lost their jobs. Right? So high frequency and it can be, let's say, can make it, but in general, the computer does the tradings, but it's the human being to make the decisions. Okay, the fund managers will set up the parameters. Those parameters will tell the computer what to trade and how to trade, what price you can buy, what price can sell. Okay, there's a strategy involved. So not simple. We are not at that level, like artificial intelligence, computer just doing this all on their own. Not there yet. Okay, it's still, even though the trading is very fast and high speed, trading within second, but all the parameters, they have to be set up by the fund managers. The computer need to ask to tell them what to trade and how to trade. Okay? And they will execute the tradings. They'll ask you to. So if you can figure out or create writing a program like artificial intelligence to automatically figure out everything, and then you can making billions of dollars easily. The last 2 points, the bull market and bear market, is very simple. This bull market is when price goes up, right? And bear market is when price goes down. Okay, and then we tie back to what we talked about in the last couple of weeks. I saw about inflation and interest rate. Okay, when the interest rates are low, and especially the central banks lower the interest rate, there'll be a bull market. Okay, when interest rates are high, and the central banks will start to increase the interest rate, most likely it will be a bear market. Okay, like this year it's a bear market. Right? This year definitely bear. Lots of stocks lost like 50% of their value from the peak price. Okay, some of the Chinese companies lost their value more than like 80%, some 90%, right, from the peak price. So when we also study about business cycle, interest rate, Federal Reserve, inflation, and those are kind of tied back to how we can have a sense of what is bull market or bear market. All right, so what we're gonna do is I'm gonna wrapping up today. It's 8 o'clock ish. Thank you guys for tuning in. I hope you guys can have something to take away. And because it's holiday coming up, so we're not gonna have a class until January next year. Okay, so there won't be any class between now and January the 6th. Okay, as we're gonna celebrate some holidays start kicking in, and people, but I'm gonna hoping you guys enjoy the holiday, taking a break. You guys have been working very hard over this year. Just if you have any questions, send me messages through WeChat. And for those, it says okay, thank you. And if I don't see you in the next couple weeks, have a Merry Christmas and enjoy your holiday. All right. So thank you. And once again, I'm going to say this Saturday night live stream from Telemaster office. Thank you guys. Have a good one. Bye. Bye.